Hello, everyone. Thank you so much for joining us for today's session on PPP forgiveness. My name is Tala Bakar. We'll start in just a few minutes, but I wanted to do a quick sound check. If you can hear me all right, go ahead and let me know in the chat panel, which you'll find on the left side of your screen, labeled under chat. Awesome. Looks like we have audio. I'm also going to invite up my co-presenters, Val and Nathan, to check their audio too. Val, you there? Hey, Nathan, are you there?
Yeah, I'm here. Can you hear me?
Yep, Nathan, we can hear you loud and clear. Awesome.
Great.
All right, let's try that again. Can you hear me now?
We can hear you loud and clear. Thanks, Val.
I guess I'm qualified to sell cell phones if I can ask if you can hear me now. All right, yeah, it sounds good. Everybody sounds clear.
All right, sounds good. All right, we'll start in just a couple minutes. Before we begin, just wanted to let people know on a few different things we'll be doing. So one is, I definitely want you to check out the handouts tab on the left side. I apologize, there's so many different handouts, but I think they'll all make sense to you. There's gonna be a couple that I'm gonna need you to open as we go through the session. And if you go ahead and take a look at those handouts tabs, you'll see those right now. You'll also notice that two of them are a PDF document. The PPP loan forgiveness one is the same one that is on the SBA website. That hasn't been updated yet, but that's the one we'll be going off of. And then you'll notice that there are a number of other links that you can open up as well. I've included our LinkedIn profiles there too. If you want to go ahead and message us there, you're more than welcome to connect with us. And then there are also two kind of Zoho sheet / Excel calculators we'll be using. So that's all in the handouts tab. If you can see those documents, please go ahead and let me know that you can see them in the handouts tab. And additionally, we have several polling questions that we'll be launching. So throughout the session, there'll be 4 polling questions for those who are looking for CPE credit. So you'll receive a certificate at the end of the session. You'll need to answer 3 of the 4 polling questions, and those will be spaced about every 15 minutes into the session. So other than that, I kind of have a pre-polling question to get you used to how we're going to do this. So let me go ahead and launch that today or right now. And the question is, how are you doing today? And just, I'm not sure if Val and Nathan can see this, but the answer choices are still alive, great, need more coffee, and what day of the week is it?
It looks like what day of the week is winning right now, so.
I've definitely felt that way, a time or two over quarantine.
Yeah, definitely this week being my first week back from paternity, it's been very jarring.
Oh yeah, that sounds like a double whammy. And just so everyone's not confused, if this is your first session with us, this is kind of how we do the session where it's Val, who you'll meet in just a second again. That was Nathan's voice. Again, my name is Tala. And we kind of do this sort of podcast format, and that really makes the session go by just a lot more interesting, in a more interesting manner. And so we'll each jump in kind of with our different expertise. So you'll see how that goes. So here's the results for everyone to kind of take a look, and we'll go ahead and get started in right now, actually. All right, so without further ado, let me go ahead and introduce my fellow presenters. So again, today's session is going to cover a guide to PPP loan forgiveness. We've spent a lot of time going through all of the requirements that were originally set forth in the PPP guidance, and then the updates that we had this week from the passage of the House and Senate bills. So we're going to cover that. Again, this is, if you're listening to this session later on or the recording, this is as of today, June 5th, 2020, so things may have changed. My name is Talha Bakar. I'm a program manager here at Zoho. I help manage our Zoho Finance Partner Program. So I mainly work with accountants and bookkeepers on how they are, showing Zoho Zoho's finance tools to their clients. I'm also joined by my colleague Val Steed, our Director of Accountants. Val, you there?
Yes. Hello, everyone. I'm very happy to be here today. As Tala mentions, we've been going back and forth through this in detail, and in a few places, I will drill into some little bits of nitty-gritty detail and try to explain a few things. And as Tala mentioned, remember the House and Senate bill. House passed it, Senate passed it. President Trump has not signed this yet, but I'm certain he will. And so in some places in here, just a heads up warning, we have to kind of guess a little bit, especially on this forgiveness form, because we don't have a new form. So very happy to be with you today and looking forward to this discussion.
Thanks so much, Val. Really appreciate that. And Nathan, you there? Can you give us a quick intro about yourself?
Yeah, so I'm the marketing manager over here at Zoho, and really what I do is I work on the finance products and I help out with the read as many articles as we can just to narrow it down as much as possible. So I'm happy to kind of
All right,
share
it
that.
looks like we may have lost audio for just a quick second there.
Can you hear me now?
Yep, we can hear you. Perfect.
Yeah, I was just saying I'm happy to be here and help share and make this easier for everybody.
Awesome. Thanks so much, Nathan. And just for folks who may have just joined in the last minute or two, this session will be recorded. There are a number of handouts you want to take a look at in the handouts tab on the left-hand side. The chat panel is a great place for kind of general, if you're not looking for a specific question or you just want to engage with us, please use the question panel as we will refer to that throughout the session. And we can also, for example, if I'm not speaking, I can go ahead and answer questions there. Val or Nathan can answer questions there. And they can be specifically directed to you. So just wanted to get that out of the way real quick. So today's agenda, we're going to cover very quickly the original PPP requirements. We're going to talk about the expectation of the new bill. It's all but certain at this point, but we still want to be sure just because it hasn't been signed into law just yet. The bulk of today's session is us going through the actual forgiveness application. So I'm going to ask that you open up the application from the handouts tab. You'll notice that there's a PDF there, and actually go through it with us. And then you'll also have all of the Excel calculators that we'll be using too. So you can actually open those. And then this is really supposed to be kind of a hands-on working session. And then lastly, we'll talk about some interim guidance on forgiveness and some responsibilities that we are told to have. The other thing I just want to mention is that we have a ton of things that we'll be covering today. So if you ask a question and we're not able to get to it, we will look at those questions afterwards. You can also message us afterwards, but we'll do our best to get to those throughout the session. All right, so we want to do a quick overview on the state of COVID right now in the US. This is actually taken from Zoho's COVID tracker, which is zoho.com/COVID. I updated this morning. Unfortunately, we've done a number of sessions related to coronavirus, and these numbers keep going up. But thankfully, it seems like they have been not increasing so quickly. And so, yeah, those are the statistics on the screen there. About 1.8 million confirmed cases since this all began. All right, so let's do a quick recap of the original Paycheck Protection Program. So if you can think back, and it seems at this point to be ages ago, the original PPP program was $349 billion set aside for these loans. The second round that was added sometime later was $310 billion. And that included there's some additional funding that went into the EIDL program through the SBA Disaster Relief Initiative and some of those other kind of ancillary programs. But these were the specific numbers related to the actual loan part of the program. The original requirements were that 75% of the loan had to be used on payroll expenses. You'll notice very soon that these actually have changed. And the corresponding remaining 25% could be used on qualifying overhead expenses like rent and mortgage payments and things like that. The original requirements were that all of the funds had to be used within 8 weeks of actually receiving the money in your bank account. You guys may have realized that this was actually something that was quite a bit difficult for a lot of businesses who were still required to be shut down because of their state or local laws, and they actually couldn't even use the funds because they couldn't be open for business. So that's been extended. And there was a June 30th deadline to show that you had the equivalent number of full-time equivalents or full-time employees that you had on February the 15th. That has now changed as well. One of the most interesting things, I'm not sure if you guys saw this, Nathan or Val, is that there are still $120 billion in unallocated funds from that second round. And a lot of that has to do with, I think, slower processing, because they're not. It's not necessarily that, it's definitely not that everyone who applied received the funds, but that they're just being slower in the way they process them. Have you heard anything in terms of the disbursement of that, Val, or what that's gonna? What
I've heard a
people are
little bit
waiting?
from a few lenders that they still have funds and people haven't applied for them. So there's still a chance if somebody hasn't applied to go apply for one of these things through certain funding organizations. If you have not gotten a PPP loan and you want to, I certainly think it's worth looking into.
Okay. It seemed like maybe it seemed the program had been getting more and more complicated, and people were unsure of whether they could get into it. So hopefully this session kind of clarifies that. But Val, you'll show that some of it is still a little bit complicated.
For sure.
All right. So the new bill that's coming up, Nathan, do you want to talk a little bit about what's changed in this new bill?
Yeah, so the new forgiveness bill that should be signed here in the next couple of days by Trump is they lowered the payroll expenses proportion of the total loan amount. So it used to be 75%, and now you can spend, only 60% on payroll, and you can spend 40% on other qualifying expenses. And the qualifying expenses, I think we touch on it later, but it's utilities, mortgage payments, and rent. So you can spend 40% on all that. And they also extended the covered period and alternative covered period from 8 weeks to 24 weeks. And like Tala mentioned earlier, it was hard to spend that money in 8 weeks for some businesses. And obviously with 24 weeks, that is a lot of time. And what I've seen, what the difficulty will be with that 24 weeks is that it's going to be hard to keep your FTEs, your full-time equivalents for 24 weeks. It can be. So you need to be cautious on that 8 weeks to 24 weeks, because right now they are actually giving you the option to choose from 8 weeks to 24 weeks. So if you think you can spend it in 8 weeks, I would definitely recommend doing that over the 24, because you never know what's going to happen in 24 weeks. And the unforgiven payback period increased from 2 years to 5 years, and that's at 1%. So that's still a small loan. So if you don't end up getting everything fully forgiven, you still have a very small loan that, that's essentially, I don't want to say it's free money, but it's you're just borrowing money that you don't necessarily have to pay a full high interest rate on. And then also the deadline to rehire FTEs moved to December 31st rather than that June 30th. And Tala, did you read anything on this FTEs moved to December 31st? I know there was some confusion with that.
Yes. So I did confirm that, and that was part of the updated guidance in the House bill. And that was actually one of the things that the Senate potentially was going to open up arguments on, but it looks like they decided not to. So there are still some requirements. So for example, June 30th is also coincidentally the last deadline to apply for PPP. So that has not moved. So people need to apply at the end of this month, but the deadline to show that you have hired back everyone is now the end of the year.
Yeah, cool. And also another thing that was kind of confusing from the beginning was the self-employed forgiveness. Actually, with this new forgiveness bill, it seems that the wording, well, actually the forgiveness application, the wording says it's capped at 15,385, which was kind of weird, because if you look at the salary cap, which is $100,000, it looks like the loan cap is 20,833. So that would mean you would potentially have $5,000 unforgiven. And I've been doing a lot of research on this, and I haven't found really a clear answer that says that you could have that additional 5,000 forgiven.
Let me jump in here, Nathan, kind of tell you what I found through the forgiveness form and where this is. Folks, let me explain that. Let me tell you where he's getting his numbers from. If you take $100,000 and divide it by 12, that gives you a monthly amount. Then if you take that monthly amount times it by 2.5, that's where you get the 2833. That's what you could apply your loan on. Then they were saying, well, you got to pay that all back in 8 weeks. Okay, so if you take $100,000 divided by 52 and times that by 8, that comes up with 15,384. That's what they were trying to cap everything with, leaving a gap of $5,448 there. That's essentially, if you have employees, and technically, from everything we read in the first set of regs, any employee, according to that reg, any employee made more than $100,000, you're going to have a $5,448 gap for every employee. Okay. I went back through the forgiveness form in detail, and it asked for owner employee. You'll see in a minute. I'll show you that's table 2. It asked to separate out all those people that make more than $100,000, but nowhere in the entire forgiveness form does it bring that back into play and take that out of your forgiveness amount, at least not the form we have right now. So this is a big question mark.
Definitely a lot of confusion.
Right, and as we get guidance, we'll try to send emails to update you on that. But it looks like the specific language used is for owners of the organization, not the employees. It looks like the employees, this may not apply, right? Those are still at 100,000, but the owners have this restriction. Is that right, Val?
And actually the forgiveness form, if you look at, I'd have to get you the exact paragraph. It says all employees that make more than $100,000. And then they ask you to mark specifically, as you mentioned, owner employee in table 2, but then they don't have you do anything with it. Yeah, which is nuts. And here's the other thing that I'm figuring, folks. This is me anticipating this change. I'm anticipating that now, because we're not limited to 8 weeks to use this money, but you've got up to 24 weeks. Now, this whole 15,000 limit thing, in my opinion, it just goes away. Unless they're going to specifically pull it out, because that period, you could easily pay that back, use that to keep it going. So I'm looking, this is the one of, there's like 2, in my opinion, really big question marks, and that's one of them.
Perfect. Thank you for that. All right. So there are a number of these. There's, of course, other points in this forgiveness bill. We want to spend most of the time actually going through the application, including those points. We'll bring some of those back in the discussion. If there are any that you have questions about, please feel free to let us know in the questions panel, and we'll try to get to those quickly as we can. All right. So now let's actually get to the application that we have as of right now. As Val mentioned in the beginning of the session, this is going to have some changes, but unfortunately, the SBA hasn't updated that in time for this particular webinar. So we anticipate some of those changes are going to be related to, some of the calculations that go off of 8 weeks, but we're going to do the best we can. If you would like to follow along, in the handouts tab, I put the PDF for the application as well. Also, if you just do a quick Google search for PPP loan forgiveness application, you'll find that on the SBA's website. So the way that the application is kind of laid out, and I'll open this up for you guys to see, is there are instructions on a couple pages, then there's the actual form that you fill out, then there's some more instructions, then a form you fill out, instructions for, I think you kind of get the point. So we're going to we've broken this up into little chunks, and we'll try to go through each of these together. Before we do that, I just want to go ahead and get our first polling question out of the way and let you go ahead and answer this. If you are looking to get a CPE certificate, you've got to answer 3 of the 4 polling questions that will appear on your screen. So the question is, what percentage of funds can be used in qualifying overhead expenses? And so I'll give everyone probably another 20 seconds or so. All right, so I'm going to go ahead and close this up in 10 seconds. Go ahead and get that in. If you stepped away for a quick cup of coffee, head back. And there will be 1 extra poll question, so if you miss one, don't freak out. All right, so here are the answers. The correct answer is 40%, right? So originally it was 25%, but they updated that to a total of 40% because of the corresponding remainder of the loan amount. 60% is what can be used on payroll expenses. All right, fantastic. Thank you guys so much for answering that. Let's actually just go ahead and jump into this application. So, of course, some of the basic instructions at the very top. One of the things that I found, it's like a really basic question, but who does this application go to? And you submit it to your lender, right? As far as I can tell, on the PPP application, you print it out, you fill it out, you take it to your lender. Am I totally correct on that, Val?
Sorry, Mike was muted. Yes, you work with your lender on this form.
Okay, and then there's also a number of documents at the end that you'll probably refer to that the vendor actually receives that you may never actually submit to the SBA. So they're going off of the lender also doing their due diligence in this process, which is, everyone's trying to figure this out at the same time. So I think that's kind of going to be part of that too. So this is the first part. So the application has, it mainly has 4 components. So one is there's the forgiveness calculation form. Then there's a Schedule A that we'll go through. Val's done an awesome job for us, kind of putting all these numbers together for us to see an example. Then there's the Schedule A worksheet. And then there's an optional borrower demographic form, which seems to be pretty simple. So it doesn't actually seem that long, but there's some components here that are a little bit tricky. So, so borrowers will submit the first calculation form and the second, the Schedule A, to their lender. So here are the instructions for the calculation form as we go through it. These are just really basic, things. The thing I want you to pay attention to is that you want to ensure that the information matches the borrower application exactly. So, for example, the PPP loan number, that's something you may need to get from your lender if you don't already have that. And then also note important dates. So go back on your statement and see when you received the funds in your bank account. That's an important date that the application will ask for, because that's the date that they'll calculate 24 weeks from. You'll need to want to take a look at some of those.
Yeah, that's when the days actually start counting for 24 weeks.
From the day you hit your account.
It appears that I've had one attendee tell me that a couple of different lenders have forms that look different than the SBA form. So heads up, work with your lender and work with their form. There could be something looks a little bit different.
And one thing, Val, I wanted to ask is, if you may have seen this, but I remember you had mentioned for the original PPP application, banks had started coming up with their own electronic forms. So there's a good chance that a bank will create some kind of electronic submission for this as well, and then they may want you to fill that out as well. So so definitely check with your bank on if they want a paper form or you want one through their website possibly.
Okay. And when in doubt, just call the bank, and I'm sure they can point you in the right direction.
Yeah, call your lender and spend about a half a day trying to get in touch with the right person.
Yeah.
It's tough, folks. Everybody's shorthanded and everybody's trying to process stuff, and it's challenging, as you've seen. But hang in there. It's clearly worth the effort.
All right, and so on to the next kind of set of instructions. This is all on page 1 of the application. Again, if you click on the handouts tab, you can follow along with us on the PDF. We'll make this seem a lot easier, I think. So one of the things I wanted to ask here, and this is just more information on what are the different pieces of information you need. This is some of the basics. Val, I think you had mentioned this. They ask for the EIDL advance amount and the application number, but then it never really comes up again in the application, right? Is that
that's another mystery. They ask you right here for EIDL advance amount, which at one point I had seen some instructions saying that any EIDL advance amount that you get technically was supposed to be removed from the forgiveness, so that technically they were not forgiving that part from your PPP loan. And I've only seen one reference to that. And then on the forgiveness form here, it asks for that advance amount, but it never applies it anywhere in the form. So I think it could be a trigger. I think there's 2 spots in here that I think are triggers, and that might be a trigger for like further investigation or more scrutiny, if you will, by the government.
Yeah. And or it could just be them wanting to know who also has the IDL, right?
Right.
How much they got. Because I remember one of the things you'll read kind of in these instructions is that the onus of calculating is on the borrower, the forgiveness amount. So at least we would expect to see that maybe the updated form will have some guidance regarding this, but the amount that you see on the form is the amount that you're submitting to ask for forgiveness. They're not going to come back with a different amount unless they audit you and they find that there's some issues there.
It's kind of like a tax return. You prepare the tax return, you fill everything out. If they see something out of whack, then they're going to come back to you. But it's certainly worth it. What I would recommend, even if you got an accounting background like I do and whatever, I would fill out this process. And by the way, the whole thing doesn't have to be applied now till December, but fill it all out. Have somebody look over your shoulder and talk to your colleagues and other people that are involved in this process, and just have somebody try to help you make sure you don't have a glaring mistake.
Mm-hmm.
And Val, I just want to get your quick take on this. So difference between covered period and alternative covered period. What is that? How do I know which one?
Yeah, here's what they did. And I didn't even hear about this. They got in the forgiveness form. It's probably buried somewhere in the act. But what they did is they said, well, if somebody got their distribution on Wednesday and their payroll really doesn't start until Sunday, we're going to give them the option to start their quote covered period on Sunday instead of on Wednesday. And that becomes the alternative payroll covered period. So you have to identify on the form whether you're using a standard covered period, the date you got the loan. So 8 weeks now, 24 weeks from the actual date when you got the loan, or if you're going to elect an alternative covered period, which starts, and the maximum they'll let you kind of defer that is if you're like a bi-week payroll. They won't allow a company with a monthly payroll to defer like almost an entire month. But a bi-week payroll, you could defer almost 2 weeks to start your covered period. And remember, probably delaying to start your covered period for everyone is helpful because that gives you more days to try to get people paid and get your stuff going compared to that. Now, you'll see that right on the front of the form when we get over to the form. You'll see him talking about this alternative covered payroll period.
All right. Perfect. You explained that way better than I could have done. So thank you. Thank you for that. And then the last point, not to belabor the point, but there are pieces of information that seem to not pop up anywhere else. It looks like there's a checkbox. Basically, if you received over $2 million in PPP funds, check here. And based on other things that might come later, this could be also a trigger to say, let's do some additional auditing of this.
Yeah, the accountant in me is saying, whoa, here it is.
Right.
Here's one of the triggers. But, it's fair game. I don't blame them at all for this. They want to have you essentially self-identify who's got the big loans. Because remember, the government directly, they pushed all the money out to the lenders until they get all the documentation from the lenders. They don't know really who's got the big loans. So I see why they added that trigger. That's fair game. All
right. So let's actually jump into kind of where we start the calculations, and then I'm going to bring up the worksheet that Val has too. So this is something. This is on page 2. If you print out this thing, this application, what you're going to want to do is rip off this page and keep it next to you as you fill out the following fields, and then we'll refer back to this. So one of the important things to note is that lines 1 through 4 are one set of calculations, and then lines after that, lines 5 and onward, use the Schedule A worksheet, which is another worksheet within the application. And
so line 1 also, Tala. Line 1 is also Schedule A.
Oh,
so
right.
Some of those are really easy, folks. Some of these numbers are really easy, and they're fall off your stool easy. Okay, but there's hidden ones that get really complex. Okay, so just to kind of walk, I think what we ought to do is take this line by line by line, in my opinion. And what it says there, line 1, and you can see line 1 here, total eligible payroll costs per Schedule A. All right, well, Tyler, flip up that workbook, and let's flip over to Schedule A for a second. Actually, no, stay on the forgiveness form for just a second on the workbook, if you don't mind. Let's see if we can get that workbook up.
Sure. So,
and
let me go ahead and this
share
is
the
the
workbook up.
Yeah, let me go ahead and share my screen. All right. So this is the first calculation form. Can you see my screen, Val?
Mm-hmm. It's the other tab, Tala.
Oh, there we go. Sorry about that.
If you just kind of start, let's see where you got it there. Actually, if you don't mind going over to the forgiveness form itself for just a second.
Yeah,
Because
absolutely.
I want to, down at the bottom, tell her,
Oh, the
click
tab.
on forgiveness
There we go.
form.
Great.
There we go.
There we go.
Okay, folks, at the top, just we had to make some assumptions here. So if you go up there and say, instead of 8 covered weeks, you put in 24, Tala. Okay, and then 75%, change that to 60. And it makes me wonder if this is actually the right workbook. Go down to schedule, PPP Schedule A, and look at across the top. This is not the right workbook. Tell it's not the new one. Sorry. You need to open up the one that says Sample Forgiveness 2, if you can find it.
Yeah, this one's Forgiveness 2. This is Forgiveness 2.
Forgiveness 2. Okay, there we go. So we got the right periods at the top. We got the percent laying out there. Notice right here it says, are you using an alternative period? Well, yeah, if you switch that, you can switch that and it'll put up the alternative period and do some different things. And you got to tell it your alternative date and your start date. So all that's kind of assumptions you've got to make. Then you need to put in your PPP loan here. And then right here, it says we're going to calculate your PPP costs. Well, that's in our case, 124, 155 here. Where do we get that? Tala, flip over to Schedule A now behind that schedule underneath. This is what they want you to do. They want you to go through each employee, okay, put in the employee's name, okay, and I didn't do first name, last name, it's just first name. So first, you've got your people in Table 1 that make under $100,000. Table 2 are the people that make over $100,000. So just run across to here's what they want to do. Name, identifier. They want you to use the last 4 digits of a Social Security. Cash compensation during the covered period. Okay. That's cash compensation during the covered period. Right. Then you put in your average FTE during the covered period, which is killer important. Okay. This is the average during the covered period, which now goes out to 24 weeks. So there's a bit of a gotcha hiding there. And then I've got also a safe harbor, which is not explained on the form, I want to talk to you about as well. Okay. Now, what that's going to do, coming across there, is that's going to come up with your average annual salary for the covered period. Okay. Then you come over and say, wait a minute, what were they making before? The first test they're trying to look for here, is, did you pay them? Did you reduce their pay more than 25%? So as you go across column and step after step after step, there's detailed steps in the forgiveness form. They're going to walk you through each piece of this. And for hourly, the first person there, Sharon, I put Sharon in there as an hourly example. So as you see, January to March, she made $34.50 an hour. Well, then when we come over to our average salary on 215, okay, and we do a comparison there, and you actually compare that to your average annual salary during the covered period. So you're comparing 1A and 1B here, you get a 28% reduction. That's not cool. So if you look off to the right, Tala, I put an additional column in here to kind of talk to you as a user of the sheet. And it's going to come across there and it's going to say, no, that's not cool. Sharon's not cool. Test further. Okay, so if somebody comes down through there and they test out and they're okay, then it's going to say, okay, but then we have a secondary test and they're going to be tested further and they're going to get nailed. Okay, so each one, I've tried to set that up. And I'm looking at this next one here. And the reason, you might say, wait a minute, somebody's 48% right there. So the next one down is a salaried person. You say, wait a minute, we dropped them significantly. Then why are they okay? There's a secondary part to the safe harbor. And that is what is, and I'm assuming this, if you look at column J, one of the safe harbors buried in this form, if in the original forgiveness form we studied, you restored their salary by June 30th, 2020. So I pushed that date out to, assuming, this is where I had to make one of my assumptions, to December 31st, 2020. So we said, well, yes, we dropped that person down during the test period. Okay, cash compensation was $14,500. It should have been like $31,400 something. So they were 48% dropped. Okay, but they're okay. Why? Because we restored their salary. Notice that Sharon above, she was $34.50 per hour. We didn't restore her, so that's not cool. So then there's one down below it that says, no, it's not cool. And actually, we reduced their salary significantly, did not take it back up. So if you go move to the right again, there's detailed calculations for that says this is what's missing. So 75% of the amount from 130, 1/1 from January 1st to March 31st, this is what should have been paid as the 75%. You only paid what you paid in the test period covered. So there's a missing $10,000 in there by the time you factor in the 75 and everything it should be. And generally, because it's now 6 months, folks, that of the number in column M, I'm guessing this is going to be about 50% of that number, just roughly 50 to 55%, that ends up being an amount that you've got to pay back, or that's not. So this column O is the non-forgivable portion of salary or hourly wages that you cut. Now, the only one last little thing here, column N, you have to actually input their average hours, the amount of hours they would have worked 1/1 through 3/31, 2020. And then that's going to use the rate for the hours. So the hours calculation is different than a salary. And you can see that's 88 cents an hour we're missing for Sharon. So we only have to throw back $368 in for her. And I'm sorry about this.
No. So
This
one thing I
you're
want
going to have to set up in some kind of worksheet, or walk employee by employee by employee down in detail. Okay. Now, if you go back, then we go back to the left side there. Then table 2 is all the people make over $100,000. And they made that pretty easy because they're saying, we don't care. You're paying them over $100,000. So we're capping it. They may change that in the next form. We'll see. Okay. Now, come down below that. And let's come right down. This is the Schedule A line by line. I don't know which slide you have Schedule A in, Tala, but this is the supporting schedule that goes back to the actual loan application. And it says, okay, first give us cash compensation for the people that make less than $100,000. Then also show us the FTEs, full-time equivalents, during that covered period. Then it comes down and says, okay, but you've got a salary and wage reduction that you missed. So we're going to kill that by that amount. And then we're going to take that and the 46,000, we're going to add those numbers together, and then give us the FTE for the people that make over $100,000. We're going to use that again here in just a second. This is where some of your questions are going to be answered. Almost every cost you pay associated with payroll, health insurance, health programs, state taxes, local taxes, retirement plans, all listed here. You have to sum those up for the covered period. That becomes part of the payroll costs here. Okay. And then they have you separate out line 9, owner employees. And you would be thinking, wait a minute, right here, they're going to actually reduce our payroll costs that we get to claim by what the owner employee is, right? No, the instructions on the form as I read it, and I don't know if this is a mistake on behalf of the agency that created the form, but they have you add that. So you actually get both. Slide up just a little bit, Tyler. What I'm looking for now is the total payroll for the people that make under 67,000 and 46,000, plus your 5,000, 2,500, 3,500 down below there for health insurance. All of that adds up to your 124, 155, and that feeds back to line 1 back in your reference, in your forgiveness form. Now, before we leave this sheet, though, we put in there, we have to tell them, line 11 in the calculation here, what is our average FTE in our reference period? This is complex a little bit as well, but not terribly complex. You have to declare what your reference period is. You have 3 options. Well, 2 options if you're a calendar business, a third option if you're like a seasonal business. You can either use your average full-time equivalents from February 15th to June 30th, and I send that right there in the box next to it, February 15th to June 30th, 2019, so a comparable time frame. Here's what I'm suspecting, and I have to guess here. They might change that election to read February 15th to 12/31/2019 because of this extension of time. They may or they may not. Or you could elect the period, and I think this one will stay the same, January the 1st, 2020 to February 29th, 2020. If you're a seasonal business, you can select a 12-week period back in 2019 from 5/1 to 9/15, but it's got to be a consecutive 12-week period. Okay, that number right there is a killer number. Okay, right now, Tala, go in and change that just for grins and giggles. Change that to like 6. Do you see the bottom line number there, line 13, go to 1? What that means is we're going to let you claim 100% of your payroll expenses. Now go back there and change that subtly just back to like 8. Okay. Now you're going to get 0.89 of those payroll expenses. Leave it there, Talon. Let's go over to the forgiveness form now. And I'm going to jump to a line number just for a minute to show you the effect of that. And then we're going to come back and keep going down the form line by line by line. So scroll down a little bit for me, please. Keep going down just a little bit more. Okay, stop right there. Now, you're going to come down and you're going to add up your payroll costs. Then you've got other stuff we're going to add to this whole thing. But the adjustment, that 0.89 quotient, where it kills you is right here. And notice from 106,000 to 94,000, we're going to lose a chunk. Okay, right there. That's where that factor quotient plays in. So the vast majority of the work back on Schedule A is really to get you to 2 numbers. Line 1, which is your total payroll costs, and the quotient right down here, the reduction quotient down here, actually 3 numbers, forgive me, and line 5, which is your payroll reduction up here because of the salaries you didn't pay. Now, I kind of put a tough example in here of people that were both underpaying their people and their FTEs were way lower, okay, way down there. Now, Tel, do you want to do a poll?
Yeah, I'm going to go ahead and launch that poll real quick for us. Thank you. And just to let everyone know, you can also try out the same forgiveness worksheet. Excuse me, can't find my words that we're talking about. So we're working off the worksheet, Roman numeral 2. So you'll find it in the handouts tab. So let me go ahead and launch our second poll for you guys, real quick. And Val, just for the uninitiated, we've been talking about FTEs quite a bit. Just to recap, so FTEs, you do your calculation based on the period you mentioned, right? If it's a seasonal business
period,
or 12 weeks, a year.
Full-time equivalent, right? And you can either come to that. Let's say you got a salaried person, but they fell back, their salary fell back down. But you could say that, let's say they work 30 out of 40 hours a week. That's where I did that one calculation on that salaried employee, where you kind of divide this by that and you get a percentage number. If they're hourly, they're giving you the option to just claim 0.5. So if they're only an hourly employee, you can claim 0.5 to a full-time equivalent. And that helps you. So let's say you kind of come to the end of the period and I've hired 3 full-time people to cover 3 hourly people to cover somebody that I had full-time for, but they're hourly. They're being generous because they're going to put a 0.5 in there. 3 people at 0.5 is 1.5. That's going to cover the FTE of 1 that I'm missing. So you can do a calculation based on percentage of full-time, or you can use 0.5 for hourly folks if you'd like to do that as well.
Fantastic. I appreciate that. So I know we got to jump back into the worksheet real quick, but just wanted to show kind of where numbers you were using
in the form.
Right. Exactly. And then, all right, so let's take a look at this. So if you look at the total loan amount that was calculated, right, that's going off the 125K. These are the numbers as of the actual application originally that you had for your PPP, right? So the employees at the time of loan application, and then you'll want to report employees at the time of forgiveness application.
Now, here's the weird part, Tala. Those numbers are never used anywhere.
Right. It seems like, again, more
kind of a reference number. Yeah, but,
right, exactly.
But just be aware of that.
No, exactly. And the same thing with the EIDL advance amount. Never actually see that again. So if you're using that same worksheet, right? So the sample PPP loan forgiveness calculation, Roman numeral 2, it's in the handouts tab that we just used. When you actually put in the covered period, Val has graciously actually calculated that period for you in that calculator. So that's important. One thing I wanted to just mention real quick that Nathan had gone over, which is the ability to elect between 8 and 24 weeks. So it looks like, as far as I understand, the only folks who can do that are folks who already have their funds, which should be kind of majority of folks who are attending this webinar. If you are still going to apply for a new PPP loan and then you receive your funds, it looks like those folks are automatically on the 24-week period. So just
yes. Sorry, I actually read something on that earlier where it's people who've already applied for it. They have the option to extend it if they need to.
Okay, perfect. All right, and so Val, do you need me to jump back to the worksheet, or should we go through?
I think we're okay to come right down here, down the loan forgiveness application.
Okay.
Let me read one thing though, which a couple paragraphs here, folks. If you, and please jot this down on the forgiveness form that we're putting up for the session, page 8. There's 2 FTE reduction exemptions. The first one states that if you had to fire somebody for cause, they voluntarily resigned, or they refused to come back to work for you, you can essentially mark those people as a 1, but you're going to have documentation. So in other words, they're going to let you get credit for your FTEs for that person if you can document that either they were fired or wouldn't come back to work, whatever. One more that I can't get clarification on, and I'm actually going to read this to you because this is insane. After all that we've gone through just now, okay? They have this paragraph that says FTE reduction safe harbor. A safe harbor under applicable law and regulation exempts certain borrowers from the loan forgiveness reduction based on FTE employee levels. Specifically, the borrower is exempt from the reduction in loan forgiveness based on FTE employees described above if both the following conditions are met. 1, the borrower reduced its FTE employee levels in the period beginning February 15, 2020 and ending April 26, 2020. And in other words, you were caught by the pandemic, which everybody was. And here's where it gets a little fuzzy here. Item 2, the borrower then restored its FTE employee levels by, notice it said restored, not average during the covered period, but restored its FTE employee levels by no later than June 30th, 2020 to its FTE employee levels in the borrower's pay period that included, here's your magic number, February 15th, 2020. If that's true, okay, so I have found no other documentation on this. If that paragraph is true, then the number you just got to make darn sure you got hired back in FTE equivalents by December 31st is the number of FTEs you had included in your payroll February 15th, 2020, and a bunch of this other intermediate FTE reduction calculation is moot. The sad part is I didn't see any trigger in the form to do that paragraph. I picked that out just by reading it. And there it is. Thanks, Tyler. Good job putting that up on the screen here.
Yeah,
Holy
no,
cow.
absolutely.
Yeah.
I know some of this application really does feel like we're doing a lot of work and then it might just kind of get pulled out from underneath us.
Well, I expect this next form to have a lot more answers when they've got to redo the form.
Right. Absolutely. So just, again, keep in mind, folks, we're going off of the old form, but the new updated guidance based on what we could find out from the House bill. So this is actually really important. Another thing that just to kind of highlight here that you talked about, I think people may have missed because the paragraph was a little long, is there's actually the exception based on so I've seen this actually play out where employees who were receiving unemployment and they were doing just as good or if not better than their paycheck were saying, hey, I'm not going to come back for now, even though the business may have opened, or if they felt like their health would be in danger. And so that is actually something that can be they say you want to document it, and you basically want to keep that with your application. There's some kind of way that you're going to want to document that, whether it's a notice to the employee, their response, an email, what have you. But you want to have some sort of documentation that occurred.
Right. A couple of things I need to mention because I failed to mention earlier. When they went to 60%, folks, the 60% is a cliff now. Don't get near it. Make darn sure you spend more than 60% on payroll, because in this new law, there's a cliff there that says if you don't spend at least 60% on payroll costs, the entire loan is unforgivable. It's a cliff.
Yes. Thank you for pointing that out. Very important.
There's one other thing too that's hiding deep in all this. There's an exclusion, or if you will, a deferral on your current payroll taxes right now, all through 2020. I've gotten detail on that. I found out exactly that deferral of your payroll taxes. When will they be due? Half of 50% of everything you defer in 2020 in payroll taxes, half of that is due in 2021, and the other half is due in 2022.
Mm-hmm.
Right. Which is pretty big. I feel like it was almost like a byline that we
deal.
had to pay for, but it's something to really utilize, I'd say.
Yeah, for sure. Gives
All
you
right.
a lot of time to save money for that.
So I want to launch our next poll question, and then I want to actually go through the application, because I know it seems like there's a whole bunch of hoopla and we've just been kind of jumping around. So I promise there's a method to the madness. Let me go ahead and launch this real quick. All right. So what is the updated deadline to show FTEs that are equivalent to February 15th? And sir, go ahead, Nathan.
Oh, no, I was going to say, Val, I don't know if you saw in the question, someone asked if...
I'll pull it up. I can actually pull it up in just a second.
Let me see that question real quick. I think he answered it, but I think it's important for everybody to understand that as well. Let me see.
All right, so while you pull that up, I'm going to go ahead and give this just a few more seconds. Please go ahead and get your answer in and close that. So yes, everyone who put December 31st, that is the updated deadline to show your FTE equivalents. It was June 30th, but you'll remember that this may have been an issue for businesses who couldn't actually use the funds within the 8-week period. So now that it's 24 weeks, it kind of pushes people all over the place. So it seems like they just chose the end of the year to make it simple.
Yeah, and Val, I just wanted to point out that question from John where he said, what if your FTEs are down, but you're spending the same amount on payroll? And your answer was the reduction quotient will still get you.
Still get you. Yeah, I went through that on forgiveness form. Yeah, here's the thing. They what they're trying to prevent you from doing there is letting go certain people and paying the same amount of payroll to other people.
Mm-hmm.
They want the numbers of people up. So the way this payroll quotient calculates out with those FTEs, I went through the form and even put in more payroll than the loan. And that quotient factor, that whole FTE thing, still kicks in according to all the detail that we can see right now, and it's still going to reduce you, and you're still going to get whacked.
Mm-hmm. Yeah, because on the application, they get you with the average salary, and they also get you with the average FTE. So
right,
you get hit kind of in both areas.
All right. So real quick, I want to go through the actual application to show people where stuff is going to go. Val, Nathan, feel free to jump in at any point. So here's some of the basic information. I went back to the very top. This is on page 3 of the application if you have the PDF open. So again, loan amount, covered period, very important, payroll schedule, something you want to list there as well. And again, calculating your covered period, you might fall under covered or alternative covered period. So read the provisions there and decide on one. Make sure you decide which one you're going with. All right, so the next portion here, so this is actual information that was taken from the calculations in the worksheets and basically just transferred over here. So you'll notice it tells you, for example, payroll costs that's brought in from Schedule A, line 10. The two sheets, right? So if you're on the loan forgiveness calculator that Val put up, Roman numeral 2, there's 2 tabs there, and they actually are interconnected. So their formulas do work across. So feel free to use this as a general guide, right? It's definitely not the end all be all because there's things that we're assuming there we're still not sure about. But it's something that you can use as a general guide to actually help you fill this out. All right.
And if you do the animation, you'll see the numbers in there, so it's a little easier to follow along as well.
Perfect. Thank you for that. So here, and again, you actually have access to this PDF for the slides and then the recording as well, because you want to go back. But you'll see that we entered in, line 2, some business mortgage interest payments. Didn't have rent because we had mortgage interest, business utility payments, and then you go down. You're actually entering your FTE calculations from line 3 on the Schedule A. The kind of summation of those of lines 1 through 4. And then the actual, this is the big one that Val was hammering home, right? The FTE reduction quotient, which really helps you figure out how much is actually going to be forgiven of that total amount. So don't just write one and then pass it through.
Yeah, you got to go through that entire nasty calculation. But I mean, look how generous they're being. I mean, seriously, you got your mortgage interest payments covered, lease payments, utility payments with the contracts existing, 215, all that stuff. And here's the bottom line. When you get down to the bottom two, they grab the smallest number. The smallest number is your forgiveness number. So the smallest of the loan amount or your payroll cost calculated out or your modified. And every calculation I did, unless I threw in a whole lot more money in payroll than we even got in the loan, it was always this line 8, the modified total that pretty much kicked into the forgiveness amount.
Yeah.
Perfect. All right. So moving on to the next portion. So this is actually a certification. This is kind of like the good faith certification you did when you applied for the PPP. So you're going to initial next to each of these. Pretty standard stuff here. Continues on downward. So remember, make sure you read through these because there's actually some decent information that may help you catch stuff that on your own application you may want to double check. So so there's that. All right. So now the Schedule A, which Val has that worksheet that we went through. These are where he was able to get all the calculations from. So remember I said there's a method to the madness. We didn't make it all up. So lines 1 through 5, just enter the amounts as directed from Schedule A, and if you have that worksheet open, you'll see that. Also, somebody just asked a question a few minutes ago. If you don't use Zoho Sheets, which is a free spreadsheet program, you can actually still open up that link, and then under File, you should be able to download that as an Excel file and use that in Microsoft Excel as well. All right. So again, pretty standard stuff here. I want to kind of jump ahead. So this is that important thing that Val was talking about, right? Having your average weekly full-time equivalents. So that is, Val, is that something that I can't remember because it feels like eons ago. When we submitted our PPP application and we calculated our loan amount there, what we were requesting,
right?
Is that something that they're going to be like cross-referencing from the FTE calculation we had there?
When you do your forgiveness form?
Right.
I think your lender is going to cross-reference that pretty quickly.
Okay, yeah. Got it. Just wanted to make sure.
And that's where you claimed your initial FTEs. You also claimed how much your average payroll amount was multiplied by 2.5, all that kind of stuff. So they're going to go back and reference to that. Sure.
Okay. Just want to make
that's
sure.
Where all this works on these lenders, and at 1%,
right.
They're not making much money. So.
Right. And you'll see at the very end, this whole thing might just be moot point, but we'll see. All right, so the actual forgiveness application here, Nathan was so kind as to put in the example numbers from our worksheet. So again, pretty straightforward. So you can actually put in the cash compensation. Folks were asking about different types of compensation. It actually tells you exactly. I mean, it's pretty detailed because you'll notice at the very bottom on line 6, it says the total amount for health insurance, for employee health insurance, and then retirement plans, and then any SALT taxes. So make sure you're looking at each of these, and you're not putting in a number that's larger than it needs to be or smaller than it needs to be, based on what the requirements are there. Average FTE from the Schedule A worksheet will go in here as well. And so you'll notice that there are 2 different FTE calculations here. One is from Table 1, and then one is from Table 2. And it looks like, Val, that was for folks who make like over and under 100K, right?
Table 1, yes.
Yes.
Under. Table 1.
Under is Table 1. Table 2 is over.
Excuse me. Table 2 is over. Right.
Okay. Right. Perfect. Okay. And you may not need Table 2, right? Your business may not have.
Right. If you don't have any people. Well, here's the thing. I think there's a real good chance, Tyler, with this extension of the weeks, Table 2 will disappear in the revised form, because that I do believe that whole penalty on $100,000 people disappears because we got more weeks to pay them. Maybe not. I mean, that was just what I had in my mind last night. I was really tearing this thing apart.
Right. No, exactly. All right. So some more requirements here. So line 9 talked about actual total compensation. So remember, this was that limit we talked about, 15,385. total payroll costs that we had was 124K, and then the reduction quotient. So these numbers that you're going to take off of that calculator, they're going to just transfer straight onto this application. So finally, the instructions for the Schedule A worksheet, jump through those. Average FTE. I know we've been using this like everyone knew what this was from day one. If you're like me and you didn't know what it was, I had to read this paragraph like 5-10 times to really hammer it home. It's on page 7. Just go ahead and really try to absorb this
Let me throw one thing out here, Tella, quick, because I did get one question here. Somebody said you have a simpler form for a one-person sole proprietorship, whatever. One-person sole proprietorship, folks, is very easy. Make sure you pay yourself as much as you did during your test period, and your FTE is 1 before, and your FTE is going to be 1 now, and so it's totally one. It's simple. 1-1. Pay as much, and we're good. Don't reduce your own pay by more than 25%. And you're golden on the entire form.
Right.
You pretty much skip Schedule A. Just come down the form.
And unfortunately, I hate to do this, but I do have to move a little bit quickly. So I'm gonna. There's some additional pieces of information that are kind of like paragraph heavy. We wanted to include them here just for your reference. So please do come back in the handouts tab. Kind of download the actual presentation slides, and you'll be able to go through some of those. So here is just the information copying over from that Schedule A worksheet. I think you guys kind of get the point here. Val, thanks so much for kind of going through all of that. I think this makes a lot more sense now for me, especially, and this was a safe harbor that you were talking about. So making sure that you don't have any excess liability here. You're following this to the T. So this is something that's kind of interesting. So these are documents that the borrower must submit with the loan forgiveness application. You want to look at this. This is basically evidence of how you calculated your payroll, payments of payroll as well. So bank statements that show those payroll expenses going out, tax forms. So these could be quarterly tax filings, and also payroll tax filings as well. And then how you calculated FTE as well. So these are things that you may need, and it's going to be different for different people, but show your calculations. If it's an Excel sheet, print out the Excel sheet. The formula is what's on there. Show how you did it. Remember when we used to do in school, show your work. It's the same thing, show your work. All right, so kind of jumping ahead. So these are documents included, so non-payroll related. So somebody actually asked, if you have a home mortgage, can you include that as non-payroll expenses? And I believe that's only if you had that already consistently done beforehand. So
as a business expense,
yeah, if a part of your home, let's say you have 5% of the square footage of your home or 10% or something that's part of the business expense, you got to show continuity. I think that's the biggest thing I learned from this is you don't want to have some new thing.
A new expense,
Yeah, you didn't rent a new place or whatever it is. Make sure you're showing continuity there.
I will add,
Tala and Nathan, there was a question regarding full-time being 30 hours a week or 40 hours a week. I've seen 40. Have any of you guys seen 30?
I've only seen 40. I'm not sure though, but I'll need to double check that. Yeah.
I have not seen 30. I've only seen 40. So you got to kind of go on that unless you find something's documented that is 30, folks. I'd love it to be 30 to help you, but I'm afraid it's 40 hours a week.
Perfect.
Yeah, and all the calculations, same here.
Yeah, and so here's the link to those calculators. I'm going to put up the last poll question for you guys. Let's go ahead and get this. So for folks who may not answer it, so what percentage of funds can be used on qualifying payroll expenses? I hope 100% of folks get this right. I'll be real happy. All right, well, I just shot myself in the foot there. And I'll put this up. So again, it is 60% of qualifying payroll expenses. Of the total loan amount that can be used on qualifying payroll expenses. If you're confused on what a qualifying payroll expense is or overhead expense, those are actually highlighted very nicely in the application as well. Just wanted to say we're at the top of the hour. We probably should have made this a longer session because there was a lot more that we want to go through. We may actually do a second session. We'll let you know. So check your emails. We may do a second one once the actual bill passes and we have the updated loan application. I don't see why we wouldn't do that. So just if you would like to have more information, let us know, send us a message. One important thing for everyone is once I end the session, there'll be a evaluation that comes up on the screen. If you'd like to receive CPE, you must complete that evaluation to receive your CPE certificate. So I know that was a lot of information. Just wanted to say thank you so much for everyone that joined. We will be going through the questions to see if there was any unanswered questions. We'll try to reach out to you. Connect with us on LinkedIn. You'll find myself, Nathan, and Val. We'll be happy to talk to you outside of this session as well. So
happy to help any way you can, folks. I'm trying to go down all these questions as quickly as I can and try to get answers here as best I can. So hang in there.
Right, and we'll keep it open for just a minute or two, but I will have to come to the end of the session in case someone wants to leave. Just want to say thank you so much from myself and Val and Nathan. We really appreciate your time with us here today. We'll look forward to seeing you on a future session, hopefully here real soon.
Yeah, I appreciate it, everybody. Thanks for coming.
Thank you. It's a really good day, folks. I hope it was helpful.
And so just real quick, I'll give you guys a second. So if you want to go in the handouts tab, open up all those links real quick before I close them for you. The important one, I put both of the links that Val had for the calculator, but the calculator 2 is the one you want. So go ahead and open that up. And then also the PDF, which is loan forgiveness, that'll actually be the slides from today's session. So I'm going to give you guys a quick second to see that. The other thing, I didn't get a chance in the session to mention it, and I know we're over on time, so if you got to leave, feel free to do so, is that Zoho is working on a forgiveness calculator as well. So there's a link there that says Zoho PPP forgiveness calculator. It uses a lot of the same calculations. We are going to continuously update that to make it better, but actually that's something that can help you get started on those calculations as well. So that's it from us, folks. I'm going to go ahead and close this session out. Thank you so much. Please go ahead and answer that evaluation that will pop up, and we'll see you next time. Take care.